Let's welcome in a very special guest at this point of time. Jinesh Gopani, Head Equities, Axis AMC, is now joining us live. Jinesh, thank you so much for taking out time for us. Could you just tell us about the markets going into the Q4 numbers? You think there are chances that Q4 numbers may disappoint expectations, or you think that expectations are muted and Q4 numbers is not something which the street would very keenly watch out for?
Yeah, hi. So Q4 numbers are important, and especially after demonetization, you had Q3, which was better than the consensus estimate, and Q4, going into Q4, the expectations are higher. What we can see is that at least from the invested companies where we are not seeing any significant, let's say, decline or negative expectations from the company than the estimates what we have. However, having said that, there would be some misses here and there, depending on the sectors, depending on the companies where they are. But broadly speaking, it should be okay.
Right. What do you get a sense in terms of the first few numbers? Yes Bank, IndusInd Bank, Infosys, TCS, all of them are expected to always deliver better than estimate numbers, but the initial few numbers are looking slightly lower than estimates?
Yeah. So as we have been speaking earlier also, technology sector is going through changes in the technology aspect of the overall domain expertise, and that is where you are seeing the companies facing challenges on growth, because the recurring business, annual businesses, there is a pricing pressure, and you have to get new businesses which are not coming thick and fast to those companies because of the digital world, where the other companies are also fighting for the same pie. So that is why you are seeing the technology sector having a sort of a muted run in terms of growth momentum. However, if you see the private banks, they continue to deliver a decent set of numbers, at least on the core profitability. At least the retail franchisee-led banks have been doing well. So there are only few numbers which are out, but generally speaking, we expect that retail-driven franchisees should do well, and it should be and on the corporate franchisee, we have to see how the asset quality shapes up.
Right. We got that mini AQR, as it's being called by some of the sell-side analysts, which was visible in Yes Bank, which was visible in IndusInd Bank. Say if it happens and it's a broad-based AQR sort of exercise, again, it could dampen the earnings estimate?
Maybe yes. Again, it depends on bank to bank. Which bank has taken adequate provision for the accounts what let's say RBI is prescribing for, and how they have been treating that the loan. So we'll have to see bank to bank how things go by.
Right. In terms of flows, what are you seeing? Let's talk about FII flows first. Do you think that DII flows are sticky and FII flows are vulnerable, which may take the markets down?
Whether it will take market down or no, I don't know. But you have seen a good inflows in Jan, Feb, March, and going on to April also. And recently you are seeing some pullback from the FIIs. However, domestic, if you see, continues to invest in the market, because the kind of flows what everyone is receiving is much better than what it was, let's say, last year or year before that, in terms of SIPs, in terms of general flows coming into the market after demonetization. So whether market going down, I think we have to see how the global events pan out, and if there is a some event which is significantly negative, maybe in the form of the French elections or the North Korea thing or something else. We'll have to see how that event pans out. Domestically, I think things are good. Economy is shaping up well. You have GST round the corner, so there are expectations of that reform panning out from July or August onwards. So I think domestically we are okay, except for the monsoons, how they pan out, which is again an uncertain event. We have to clearly watch on how the global events will pan out and how much that can take away the FII flows back from the emerging markets and so India.
Right, but in terms of domestic economy, do you get a sense looking at the numbers, the high frequency data, that there is a recovery?
Yes, certainly. After remonetization happening, you are seeing the momentum picking up. Also, you are seeing the order inflows coming on the capital goods side or the construction side. However, it is not full-flown order book inflows which is coming to all the companies. But having said that, at the ground level, you are seeing some pickup happening.
Right. And in terms of, say, if the global cues are supportive or global liquidity is supportive as it has been for the last couple of years, you don't see any problem for markets to give positive returns even from here?
So that again depends on how GST gets implemented, how the earnings season pan out. If GST gets implemented in a quarter time, then there is no problem. But if there is some glitches here and there, then it might wash out 1 or 2 quarters in terms of earnings for the companies. So we'll have to see how this reform agenda takes shape, how monsoons behave. If it's a very bad monsoon, again you will have some breaks in the market. But if monsoons are very good, then again that euphoria will come in terms of rural sector getting significant uplift. So all this is sort of an, I would say, ongoing things, and we'll have to carefully watch each and every event which unfolds.
Right. So overall on the earnings outlook, you're confident that a double-digit earnings growth will happen?
So again, since we look into bottom-up stock picking, we always look into the companies where we are invested, and as far as whatever research we would have done over last 3-4 months, we are not seeing a significant miss on the numbers. In fact, we expect some companies to surprise positively. That might be at the expense of some companies which are unlisted and were on the cash side of the business, and that is why the branded companies are getting some kind of a share in the entire after demonetization. So again, bottom up, I think wherever we are invested, we are very confident on. Maybe there might be some misses, but otherwise we are looking at a good numbers.
Right. In terms of flows, you said that FII flows difficult to predict. There are a lot of events. In terms of DII flows or the SIP culture, you think that it may not increase from here on, but the sort of change that has been seen in the last 2 years, at least that would continue?
Yeah, we are certainly positive in terms of money flowing into mutual funds or the insurance side of the sector. And especially after demonetization, you had a lot of money which has come into the banks in the form of deposits, and it has to find some place in terms of investment. Also, with the other asset classes not giving that kind of a lucrative approach in terms of investment, I think you will see good inflows to continue even for next few years also.
Right. In terms of saving culture, do you think, what is the sense that you get from your sales team? Do you think youngsters are more inclined to save towards equity rather than debt?
Yeah, certainly, if age is in your favor, then the appetite to take risk is slightly higher than for the age class of, let's say, 50 plus. So obviously, that should also help in terms of inflows. But having said that, when we see our investor profile, it is across from, let's say, 35 to 60 years of age. So I don't think as of now we have got that much demarcation in terms of only the young class will invest and the old age people will not invest. I think it is more to do with the FD rates coming down, the other asset classes not giving you that lucrative opportunity. So I have to find some investment asset which will give me a return which is more than inflation, more than real GDP growth. So equity is one of the best option available.
All right, equities is the best option available, but since December our markets have run up quite a bit. So from here on, if one is investing in equities, what kind of returns can they expect in a 12-month period? What's your target for the Nifty?
See, very difficult to give you those targets, because as I said, there are too many events which are unfolding every month or every quarter. So very difficult to give you the target. In fact, nobody thought that market will be up almost 15% after demonetization, because the expectation was that the GDP will get shave off, the numbers will be pretty bad, and suddenly you saw numbers coming in very good for Q3. And especially after the UP election win by the ruling party, I think, BJP. So that has led to a significant surprise to the market, and markets are up almost 15% from where it was in Jan. So to that extent, it is very difficult to give you a guesswork. But I think from a 3 to 5 year view, if you really want to sort of have a benchmark, then it is a nominal GDP growth is plus 2 to 3% is what you should expect from the market.
All right. From here on, do you think it will become very difficult to get good returns? You have to pick the right stocks. Will that have to be the approach, or do you think for those who invest in balanced funds or just large cap equity mutual funds, will they also see strong returns?
So India has always been a bottom-up stock picking market. If you analyze for last 20 years, it is all the stock ideas which have delivered significant returns to the investor. I think that should continue further, because India is a land of entrepreneurs, and you will have many sectors, many companies who will emerge over a period of time and will again give you those opportunities to make returns. So it is very difficult to give you a view that only large caps will do well or mid caps or small cap will do well. But I think the focus, what at least we have, is that identify good management who have a pedigree of to run this business over a period of many years and has delivered in terms of ROEs and cash flows. And if you analyze that, I think the wealth creation opportunity is humongous.
Okay, then let's talk about themes that are likely to work out from here on, and where we are going to see good returns coming through. Do you think consumption is a theme that's going to work out, or the risk because of the monsoon remain high, valuations are also quite expensive? What would be the themes that offer at this point of time a low risk, reasonable return bet?
See, if you want to play India, I think it is largely you should play the domestic side of the economy, which is looking, as I said, good and coming out of the slow growth trajectory. You have 1.2 billion population. You have per capita incomes which are lower than the emerging market countries. So there is a huge scope. The kind of investments which are being done by the auto industry gives you the indication that the consumption as a theme, be it auto or FMCG or anything related to a Indian citizen, maybe affordable housing sector as such, all this should have a significant positive impact if things go well, and if the policies which are being implemented are effectively taken care of. So I think overall domestic side of themes which can offer you a secular growth trajectory should do very well. So in this, what we are playing is like private banks, more on the retail side of the franchise, NBFCs, again very selective NBFCs where we feel it's a secular sort of 5 to 10 year story. Auto ancillaries who are part of autos, let's say, and the consumption theme. Cyclically, you can play capital goods maybe for 2-3 years, and but they are more cyclical in nature. And if India has to grow, you need the citizens to have the per capita income to rise. The poverty levels have to come down. Employment generation has to come down. Job growth, which is very important. Hopefully, we should see job growth momentum to pick up over next 12 to 18 months once the reform agenda again takes concrete shape. So all this should help domestic economy to do well, and that is what the expectation is, that can we grow at 8% for next 10 years. If that is the case, then I think it is better to play domestic kind of themes than let's say the export themes.
But what are the risks involved here? You said that you expect on a secular basis over the next 10 years the domestic driven sectors to do well. But some of the stocks, their valuations are very high. Yes, they may be factored in the high growth. What if the high growth doesn't come in? What if they are shocks? The monsoon is not good, or reform process stalls, the elections are coming up. Then what? Then what could be the downside risk? How does one pick here?
See, I think monsoon is not a big risk unless and until there is a severe drought in entire India, which normally doesn't happen, but we have to be cognizant of that fact, because again the rural will slow down, and hence the numbers for the companies who are more inclined towards rural sector will not do well. So again we have to be cautious on those stories, but I don't think monsoon is a big negative, I would say. I think more risk is coming from the global world, where you have tensions across the board, either in terms of elections or in terms of the military issues. So all this might take market down if there is an uncertain event which suddenly happens and we are caught off guard. And for that, it is very difficult to pinpoint that this will happen and markets will go down by 5%. It would be a passing phase. And as I said, if you take a longer term trajectory, if your India is doing well, and if the current government does what they have promised in terms of job opportunities, in terms of affordable housing, in terms of lifting the poor from out of the poverty line, I think there is enough scope. So valuations are high because there is a hope that all these things will happen over a period of time. So I think even from the investor perspective, we are taking more of a 3 to 5 year bet than only 1 year bet that valuations are running high, what we should do. Having said that, valuations are high, and we have to be cognizant that earnings come for the companies where you are invested.
All right. You said you like the domestic theme sectors and stocks. Now, would you then look at investing in some of the airline stocks that are again, largely domestic demand driven, or even real estate? The demand for housing is strong, and should you have higher incomes, you would also want a home for yourself. What do you think about these two sectors?
See, all are in a way B2C as a segment. So we will evaluate it as and when we find that valuations are okay and it is worth going into those sectors. So as of now, I cannot tell you whether we are looking at it or no, but generally we have in our universe and we'll look into it.
All right. What about stocks like stocks from the cement space? You said you like auto and ancillary. What about cement? That is also a proxy to road development, to housing. Some of the EPC players, would you look at them favorably? What about the other domestic looking stocks that include seeds or agri related companies like tractors? What would you do?
So if you see our portfolio, we have investments in few of the cement companies as well as on the agrochemical companies. So we are, as I said, if you want to play domestic theme, you have to carve out what all themes you want to play and accordingly give a weightage in the portfolio. So depending on the sustainability, depending on the secular growth momentum, we would like to increase or decrease the weightages of that stock in the portfolio. So we are looking into most of the themes what you articulated, and as and when it makes sense, we'll definitely buy or sell depending on the valuation and depending on the business.
Right. Jignesh, most of the sectors that you're overweight on are cyclical sectors. They keep growing and, they keep giving moderate returns. Let's talk about some sectors like real estate. Let's talk about infrastructure. You may not want to own them, but recovery over there is important for some of the other cyclical, some of these other consumer names, some of these other consumer durable names to pick up. What is your view on these sectors? Is the base effect good enough for a good growth?
Yeah, I think so. Capital goods as a sector, which is a direct proxy to infra investments, looks interesting over next 2 to 3 year view. And we already have a good investment in that sector by buying into a few of the companies which are let's say high in technology and also good in the balance sheet sizes. So so if you want India to grow at 8%, you need all the segments firing, be it services or agriculture or manufacturing or investments or infra. So you need infrastructure is more of a facilitation to higher growth momentum, higher GDP growth and higher job employment. So I think we are we see good signs in that sector, and obviously we are playing through capital goods as a proxy in a big way.
Right. If I just look at capital goods, do you think over the last few years, people have started to play it via the building materials or via the suppliers rather than direct owning a L&T or direct owning, some big capital goods company?
Yeah, so if you take building products on the capital goods side, then you are right. We are seeing it more as let's say a brand story, where you have company now which was earlier B2B and now it is B2C, trying to advertise their product, making it more of a branded kind of a story than a general B2B kind of a story. So you are right that people are trying to find out good stories which has direct or indirect correlation to the infra growth or real estate growth or overall GDP growth.
Right. I know you've already answered your view on the cement, but I just wanted to understand that cement sector valuations, are they telling you that, again, people want to play the infra recovery via cement rather than these execution plays? Because in the last 7-8 years, execution has not picked up, and that's why cement valuations are at an all-time high?
Yeah, so in some sense you are right. The best way to play, let's say, road sector or any other big projects is either you find out the ancillaries who will be which the commodities or the products which would be required going into those projects. So be it a cement or some capital goods, as I said, the generators or something else. All this would be required if you want a project to get started. So I think the best way to play infra, in my opinion, is through this because it is more, because the balance sheets are good, the ROEs of these companies are better. They are mostly less levered companies. So rather than taking a big bet on the infra project as an investor, where the returns are back-ended and you have to wait for 5 to 10 years in terms of project to get materialized and then start throwing you cash flows, it is better to play through this proxies.
Right. Let's talk about sectors like IT and pharma, and let's start with pharma first. Do you think the best in terms of earnings is behind, or with the recent underperformance of pharma, that sector has now started to look interesting?
Still, I think there is some pain left in the sector in terms of whatever, when we are talking to the various industry experts or the companies, I think still they are not that clear on what will happen in US, and also you have now some sort of a I would not say an issue, but in the domestic market there is a thought of prescription on generics rather than going for branded generics. So all these are more of an issues which would take some more time to I think understand and what impact it will have on the earnings as such. So I think there is some more time in terms of till we get the clarity, or the companies get the clarity on really what will happen in US, because I think US is a big market for all the big pharma companies, and there are many issues around that economy. So we'll have to wait and watch for at least maybe 6 to 12 months, and then take a concrete bet on whether the earnings, the good growth story is over, or it will come back again in a big way.
Right. Just if you look at the pharma space, the biggest gains have come in from names like Sun Pharma, names like Lupin over the years. And the biggest trigger has been that their US market has been very small, and slowly and steadily they started getting approvals. They started building, good sales team over there, and that led to further growth. Do you think it's still a bottom-up approach towards the pharma sector, where you have to find companies where base effect is very small into US, but they are building new plants, they are trying for new approvals, even though the margins may be lower, but you believe that that should be the way to play pharma?
I think the best way to play pharma is to understand what kind of R&D they are doing. I think more the complex R&D, the better chances of getting rewarded in the market, as well, in the market in the sense in the businesses, in the therapeutic segment where they are focusing on. So I think how we play is like what kind of research the company is doing, and where is their focus. Is it into complex sort of a generics, or it is just generic and trying to go for a volume story. So I think R&D is the best way to measure what companies' earnings will look like maybe 2, 3, 4 years down the line.
Right, Jinesh, thank you so much for taking our time for us. Always good to get a perspective from you. That was a view coming in from Jinesh Gopani of Axis AMC.